Hey traders, this is Ron Haight at Market Tamer. Happy Thursday. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Lead out here with the spiders. Now, I didn't have a video last night, but we held the 5-day EMA in blue. And if I zoom in, you can see it even closer. We held the 5-day, sort of back tested the breakout, and what happened today? We gapped higher, closed near the highs of the day. The S&P, which I have a long-term bullish position in via the spiders, remains bullish. The target is the all-time highs back on January 26th. It's still looking pretty good. Now, if you go to the diamonds, not so much. They're still lagging. Yeah, they're bullish short-term just because they're above the blue line and the red line. Blue's 5-day, red's 20-day EMAs, but it's still caught in this range. Now, the IWM gave us bearish engulfing back on Tuesday, a little bit of a down day today, right back up. So the bulls still have the edge here on the daily charts. Right now, that bearish engulfing is not holding much weight at all. In fact, I would just call it dead. As of right now, I'd say a double top is the more likely chart pattern to use, because on the bearish engulfing, the volume was pathetically light. If we take a look at the Qs, new highs, right? Just blew out the previous highs, you could argue back from June and even here most recently in July. 1.72% volume, not bad considering it's the summer. So overall, bulls get the edge going into Friday and next week. Also keep in mind, earnings season is here. Some banks are going to report tomorrow and then a whole lot next week and even more the week after once we get through July's expiration next week. Taking a look at the VIX, it's sub 13. We're down in the 12, so that still is bullish. Now, Apple's been looking pretty good here. It did jump up today 1.72%. Target highs from early June. Yes, it's in a trading range if you go back to May, but it's still holding up pretty good. How about Amazon? Cowabunga. This thing, new all-time highs, nearly $1,800 just for one share. Today it was up 42 bucks alone. If you just go back over the last 5-6 days, up almost 100 points. So Amazon's looking good. If we go to Google, new all-time closing highs. Google soared today up over 2.5%. $30 was the move. Take a look at MELI, which is Mercado Libre. Going back 6 months, and you know what? If we go back a year, you can see the high was March. You can see it coming down here. I zoom in. Today we closed above the 200-day moving average in purple, and we closed above the previous little mini swing high back in June. The point is, we're above the 200-day in purple, the 50-day in orange, both institutional moving averages, and we're above the short terms, the 5 and the 20. Volume today was decent. I might consider a stop if I wanted to go long here, maybe at the 20-day EMA. Right now, that's at 302.69. You know, looking at what, 16 bucks or so. And then also in news was AVGO, which is old Broadcom, is making a bid for CA, which is Computer Associates. So Broadcom was down 13.76% today. It put in a big hammer. From a probability perspective, just my pure guess, I'd say that type of hammer should be a bottoming type pattern, but we would need an up close tomorrow, or at least a sideways close. We don't want to go below the open today on any closing basis. So no close below today's open. That's what we want to see. Target would be a gap fill. See how this plays out. Because they were the acquirer, they went down. Now the acquiree, Computer Associates, jumped 18%, up almost 7 bucks to $44. When I typically am caught in a buyout situation, and let's say I had CA stock, this is as good as it gets. Unless I believe there's a white knight out there coming in to save the day and raise the price even higher, there's only downside now of giving back that 18% gain. So if this happens, I'm out. You know, basically shoot first, ask questions later type of analogy. Just get out and get out of the way. Take the profit or take the capital and move on. From a covered call perspective, again, you could take in some premium, but if the bid is, not allowed by the Justice Department or whatever, it gaps back down and all the profit is given back or all the gain is given back. That's it. Have yourself a fantastic Friday ahead, a super weekend, and I will be back with you on Sunday with the next video. Take good care, folks.